Hey everybody, Marty Missouri. Good evening, December 10th, 2018. Just a quick one for you tonight. In front of you is that Dow chart that I've been updating for you almost daily of late. Recall back here in mid-November, I drew this circle and said, look for a test of this level. Didn't get it. Rallied impressively on optimism over the meeting between Presidents Trump and Xi at the G20 summit 2 weekends ago. Big gap higher on the president's comments about that meeting. Huge decline on follow-up commentary that said wasn't quite what was presented, at least not all of it. Big down day last Thursday, closed higher, started higher on Friday. Trade advisor Peter Navarro contradicted Larry Kudlow earlier in the day as the market was rising. Kudlow said the 90 days will get extended if need be. Makes a lot of sense to me, frankly, with all the things that need to be discussed. Navarro, an hour or so later, said, no, that's a hard deadline and tariffs are going up if we don't have a deal by then. And the market went down a ton. This morning, at one point, the Dow was down 580 points, actually closed above yesterday's close. I'm not as optimistic about Tuesday as I was about last Friday, and that turned out to be wrong. It looked like it made sense in the beginning, but that negative trade news killed it. Looking at today, the volume, the breadth, and everything else, that rebound didn't look as promising to me as last Thursday's rebound did during the day. Doesn't mean that we don't go higher tomorrow. In fact, it was interesting looking at futures a bit ago. I was looking at Dow futures, for example, down triple digits, S&P futures down a similar percent, and NASDAQ futures down even more. Suddenly, over the course of just a few minutes, they came bounding back almost into the positive, and Asia went from noticeably negative, China in particular, to nicely positive on the evening. So it didn't take long before I found the headline that said that there was a phone call Tuesday morning, this morning, China time, between Treasury Secretary Mnuchin, Trade Advisor Lighthizer, and their Chinese counterpart to talk about some of the logistics of the talks to come, but no other details, nothing about decisions or anything that was made. The simple news that a phone call happened, and we saw the Dow rally triple digits. So folks, if you question what I've been saying the last few weeks, actually for the whole year, about how incredibly destructive the kind of trade war that's being threatened with China would be, make no mistake about it, the market completely agrees. I get that the Fed could be a headwind if they raise rates, but only in the context of a trade war, in my view. The Fed should be raising rates in a robust economy. The economy isn't as robust as it was earlier in the year. It's still okay. My analysis says that odds still favor continued expansion in the foreseeable future over recession. Therefore, I'm maintaining a very growthy asset mix because the data suggests that more growth is yet to come. I do feel quite strongly, though, that if we do not see a resolution to this trade war, 6 months to a year from now, we're going to be having a different conversation because conditions, I don't think, can withstand what's being threatened. And we are going to be forced to then get defensive sooner than we otherwise would have. What really should happen is a legitimate truce that is lasting is agreed upon or is announced. We're going to see this market come bounding back like we have so many times historically when the price action conflicts with the underlying fundamentals. By definition, that's what we're dealing with right now, which keeps us staying the course. When the underlying fundamentals tell us that the outlook going forward is more likely recessionary versus expansionary, then of course that's the signal to begin getting defensive. At the margins, incrementally, will we get defensive in the meantime? Sure. In fact, at the beginning of the year, I think we started with like 5% staples in healthcare. Now our target is 10% for each. We're a lot less technology, we're less Europe and so forth. So absolutely, the technical factors that we see in the market and the waning of some of the data has had us getting incrementally more defensive. But on balance, we're still very growthy, and thus our portfolios are sure feeling this volatility. But that's as it should be, as I keep saying, given the weight of the evidence. Weight of the evidence changes, we'll change our tune, and we'll change our allocation. Thank you as always for watching and listening. I will continue to keep you posted. Talk to you soon. Bye-bye.